Good afternoon, traders. This is Tony D from easyMarkets in the Sydney dealing room. Update for you from last night. We did see the ECB come out, not fireworks, definitely did acknowledge a slowdown in growth in the first quarter though, so that has led to the breakdown from the key support, and we are on track at some point to test the big 120 level. At the moment they were holding at 121 so far today. What do you think that might slow it down is a little bit of weekend profit taking, as the US dollar's been heavily bought all year, all week, and the main driver of it being the US 10-year yields actually dropped back below 3%. So the situation is right for a short squeeze or a little bit of a bounce. And really, nearly every pair you could play that. You know, you could look for the market to find support on the pound, which has been holding above the 139 level for the last couple of days. You could look for the Aussie to find a bounce. You could look for the Kiwi to find a bounce. Everything's slowing down in terms of the speed of which is falling. So this is what usually happens before you do get a retest on the top side, looking for that resistance. As soon as the party sort of announced it's over, you get that squeeze on nearly every pair. With the dollar yen struggling as well to make fresh gains overnight, that could be part of that pullback if that was to happen. Now this is a tactical trade, not really the sort of longer term view, but if you are looking to sell, then you definitely want to sell on a bounce rather than sell at these multi-week lows, and especially in Asia. Now the big news announcements tonight can also move the market quite drastically. So we do have the Q1 GDP from UK. Now the rate chances of the rate hike chances in May is around 50-50, and many traders are looking to this GDP number as the make or break for that rate hike from the Bank of England. So a stronger number than expected 0.3% quarter on quarter, is going to start getting the market to price in a higher chance. That's where you can get a big move here in the pound tonight. So that's what's in play in the start of the European session. Then the big announcement later is the US GDP for the first quarter. Now that is expected to be slower than the fourth quarter, so it dropped from 2.9% annualized down to 2.0% annualized. Still a decent number, but we have to see exactly what that number comes in as. See whether these tax cuts are playing through as positively as expected, or you could see the US dollar give up a lot of its gains that it's had, because that's a big number that can change sort of sentiment. And from these levels, the ability for the market to squeeze once it's been one-sided moves like this Kiwi moves, just 10 days of selling, then the squeeze can be quite larger than normal in terms of reversals. So it is a really important day. How we close today this week is important for sentiment going into next week, and how aggressively the US dollar is going to be behaving. The big move in the US Treasury seems to have taken out its target. If that continues to push back from 3%, then you do have that counter trend ability. While it would be nice to get the euro at 120 and the pound a little bit lower and the Aussie at 75.00, you don't always get those nice round levels that the market might present to you in the past. But if the market changes direction, then the market changes direction. So that's what you need to be watching. If you want to play crosses rather than the US dollar, and keep an eye on the dollar index as well, pull back towards 91, 90.50 would be interesting in the short term. If you want to play the crosses, then the crosses which are moving quite nicely are the Aussie Kiwis in a nice little uptrend at the moment, 3 weeks off the lows at 105, and the Euro Pound is starting to show nice weakness here, resuming its downtrend after failing at the previous resistance at 88. So it's got a little bit of room here still to move. On the big picture, it's still got a lot of room to move down towards 85. Spent most of a lot of the first half of 2017 at the 85 level, so it can definitely get back to those levels again. And if you get that nice news with the pound outperforming and the Bank of England raising rates and the ECB being cautious as they were last night, then it makes sense that would be a clean play for the pound strength away from the US dollar influence. Alright guys, if you want to have a deeper chat, please come through on the contact details below. If you want to have a dealer like myself assist you with your trading, please contact us as well, or sign up your account below, and we'll talk with you about what is required to get someone to assist you.